Now to Rich Clarida. He's the former Federal Reserve Vice Chair, now Global Economic Advisor for PIMCO. Welcome back. It's good to have you.
Yeah, looking forward to the conversation.
What do you make of the Bessent comments? Are we reading too much into that, or is he saying something here?
I did take note of it for the reasons that you and Steve Leisman mentioned. First of all, we haven't heard a lot about wait and see from Secretary Bessent until the last day or two. And then what I really took note of is when he said that he wanted the next Fed chair, which will be Kevin Warsh, to kick off the rate easing cycle. And I took note of that as well. Now, that's not really news in the sense we know the secretary is in favor of lower rates, but the mention of the timing I thought was interesting.
Well, it remains to be seen whether June is going to actually happen.
Sure.
And I suppose a lot of that will have to do with what oil does. But I mean, you would agree, though, with Mr. Bessent, if we want to take it for what it is, for what it's worth, that the Fed is right to wait and see and just see where all this goes. There's no rush to do anything.
For a couple of reasons. One, obviously, inflation's moving in the wrong direction. Secondly, there is a lot of uncertainty about the persistence of this shock. Maybe if I can parachute in a little bit, when you talk about looking through oil shocks, a lot of oil shocks in the last 50 years have really been mean reverting. Oil moves up and then it comes down quickly. You can also have an oil shock that's more persistent, as we saw like in 2010, 11, and 12 with oil at 100. But even there, the inflation effect really only directly is within a year or so. But I do think that there is more than the usual amount of uncertainty because of the nature and the potential duration of the hostilities in the Middle East. So I think it's very sensible to wait and see at this juncture.
And I thought Steve was very astute in how he, in a way, corrected my language by saying, when you use the words looking through, it can mean different things to different people, especially when you're talking about the Fed. It seems to me that he's correct when he says, essentially, don't overreact to something that truly has proven to be transitory, right?
Sure, and I think he's also, not for the first time, Steve's on top of the pulse of the committee, in the sense you have 19 folks, and they each give speeches, and they each give interviews, and you do have a group, it's not a majority, but probably 7 at least of those 19, some of whom are voters, who basically think the Fed is done. They think the policy rate is close to where they want it to be, but at least a majority of the committee as of March, after the initial oil shock, felt that, a couple more rate cuts would be appropriate eventually, but obviously in no rush to do that this year.
As a former central banker, where's your temperature on private credit? Are you at 98.6, or are you a little elevated, but not yet in need of, something to deal with a fever?
Look, it's a very broad asset class, and parts of it have grown rapidly, in particular, direct lending to middle market companies. And obviously, it's not been stress tested in a downturn, but there are other elements of the private credit universe, the asset-backed elements where you're lending against tangible collateral. So we think it's important to really take a granular perspective on it for sure.
You think Chair Powell feels the exact same way? How do you think they're feeling about it?
Well, I wouldn't know. I haven't talked to him about it. What I would say is the Fed is the primary regulator and supervisor of bank holding companies, and at minimum, the Fed will want to be comfortable with the direct and indirect exposure that large banks have. Based on publicly available information, the exposure looks to be pretty modest relative to the size of their balance sheets, but of course I'm no longer an official, so I haven't seen the detailed data. But I think that's probably the Fed's primary focus right now, is just making sure that it understands the exposure of the banking system to private credit, which, as I said, based upon the information I've seen, does not appear to be a concern right now.